Welcome to episode 4 in our ongoing series about crypto market valuation. In this series, I describe my approach to market entry and market exit within the cryptocurrency market for this market cycle. In the last 3 episodes, we went into quite a bit of detail understanding how Bitcoin works, the scenarios that it's likely to play out in from a price perspective, what Bitcoin might grow into in terms of a grand narrative in the long term. And all of this was based on a premise that Bitcoin, being the dominant asset in the cryptocurrency market, whatever happens to Bitcoin, our premise is that the altcoins are likely to follow. So if we have a good understanding of what Bitcoin is doing and a view on where Bitcoin is likely to go, then that gives us a sound basis for further analysis when it comes to understanding what the altcoin market might do. If you've not watched episodes 1, 2, and 3, I would encourage you to go and do that, as it does provide quite a solid analysis of Bitcoin and its likely price behavior. Okay, so in this episode, we switch gears a little bit, and it's all going to be about looking at altcoins. Now, before I go further, I'd like to, again, as always, do the standard disclaimer. This is not investment advice. The information we present here is for education and perhaps entertainment. Any reliance on this advice to make investment decisions is purely at the user's own risk. And as we know, and as we've seen, investing in cryptocurrency is not risk-free. In this presentation as well, we will be looking at indicators or an indicator. Now, this indicator is based or developed based on fundamental analysis. We don't use technical analysis for the altcoin indicator. Now, that's not to say that I don't think technical analysis is useful. It's just not something that we've elected to use for now. Perhaps it's something that we would use in the future to augment this approach. But for now, the indicator based on our fundamental analysis is deemed to be sufficient. I suppose I could also add at this point, if you do like the content, we would appreciate a like. And this is an ongoing series. We're likely to issue at least one more episode. So if you want to get the information hot off the press, do hit that subscribe button. Okay, so what are we going to be talking about today? Well, as I said, today the focus is all on altcoins. So we'll start the discussion with a little bit of an understanding of market cycle psychology, as this will form the foundation of our discussion. Once we've understood a generic framework for market psychology, we'll then look at how that looks in the cryptocurrency market space. So we'll then develop a crypto market cycle review and analysis. And once we've done that, I'll then go into the details of how we've developed our cryptocurrency market sentiment indicator. Okay. So let's start with a quote. Warren Buffett is credited with saying that as investors, we should be fearful when others are greedy, and we should be greedy when others are fearful. And what he's highlighting here is the relationship between prices of assets in the market and just regular old human psychology. Okay. I mean, very simplistically, what happens is as the market starts to heat up, more and more people become interested. The market, therefore, then becomes even hotter, and there's this belief that it will continue to go up, and people become very greedy until there's a decline, at which point then the sentiment switches from greed to fear, and the price responds accordingly. Or, the sentiment and the price correlate so that as the price goes down, the fear increases, and that just fuels further sell-off. So if we were to invest, it would be useful for us to have an understanding of where we are in terms of overall market sentiment. Are we mostly greedy or are we mostly fearful? If we understood this, then we would know when it would be a good time to enter and when it would be a good time to exit. Now, this can be better depicted using this very useful graph from a website called wallstreetcheatsheet.com. Okay, and they show sort of graphically how greed and fear, just regular psychology, works with price. So I'll just take you through it very quickly. So as you can see, on the y-axis we have price, and on the x-axis we have time. And initially what happens with markets is it's kind of muted, and there's sort of disbelief that anything's going to happen. There's a lot of skepticism about the value of the asset or the price of the asset. I mean, this is particularly true of Bitcoin, right? Even if you're not very familiar with Bitcoin investing, you know that the markets swing in terms of sentiment between, just general skepticism for Bitcoin and then obviously a lot of enthusiasm. So what starts to happen is, as that enthusiasm starts to build, hope starts to set into the market and the price starts to increase. As the price increases, more and more people pay attention to it. The market as a whole, starts to turn its attention to the asset, and optimism and belief set in. And that spurs further price growth. And more people enter the market, everybody believing that this is an opportunity to make some money. Regular old greed starts to kick in, and that then spurs the price on even further until we get to euphoria. Now, what happens at this point is that those that got in at the early phase, they look at it as an opportunity to take profit, okay? And I mean, normally they will be sitting on massive gains. So the sell-off starts, right? And that euphoria that you get at the top of the cycle then, starts to give way to a little bit of doubt. Now, normally what happens is there'll be a drop in price, and then the price will bounce, right? There's a term in investing world known as a dead cat bounce, right? That's what happens, and the market as a whole just views it as a retracement, expecting the price to climb. However, the next batch of early investors possibly see this as an indicator for time to sell, so they start to sell. And that's where the greed then rapidly starts to give way to fear, and that spurs the reverse, where more and more people sell off as anxiety, denial, panic, and capitulation set in. And then at the market bottom, you have a lot of angry late investors who are just skeptical about the asset. They swear never to return in some instances, and the price sort of remains relatively flat through the bear market for quite some time. Maybe there might be a bit of depression that set in because people have lost life savings. These things do happen. And then the cycle begins again, where the skepticism slowly starts to give way to a more optimistic view, and we start the cycle again. Now, if you compare this wallstreetcheatsheet.com graphic to the price of Bitcoin between 2013 and 2015, you can see that was the early bull market. You could see a very similar pattern in price behavior. And if you overlaid the most recent bull market, the 2016 to 2018 boom bust market for Bitcoin, it will have a similar pattern. Okay, and there's no reason for us not to expect that this would happen again. So it's useful for us to try and have a view of this because we will expect again, as I said, that this might happen. So knowing this, if we could determine indicators that would show us, are we in a predominantly greed phase of the market, or are we in a predominantly fear phase of the market, or are we somewhere in between? That could give us useful information in terms of timing market entry and market exit. So knowing this, we'll now look at the crypto market cycle. So the crypto market cycle as a whole, as we said before, our premise really is that it all is based on what Bitcoin is doing, okay? So that's why we spent a lot of time really getting a very clear picture on what we would anticipate Bitcoin doing in this market cycle. So just to recap, Bitcoin leads the market. As Bitcoin starts to rise in price and confidence in Bitcoin grows, that confidence then starts to extend to the altcoin market. Now, as we said, Bitcoin behavior appears to be strongly influenced by the halvings. So we would expect that after a halving, sometime after a halving, that the Bitcoin price will take off. So that already indicates to us a good point of entry into the crypto market as a whole. Okay, but looking at the market as a whole, we can note that typically it goes through 5 phases from the hope to euphoria phase and just before the bubble pops, right? And this is how it is. Normally it starts with a technology revolution. So in the first bull run, it was all about Bitcoin and better Bitcoin, right? The first wave of altcoins that came into the market that supposedly improved on the technology of Bitcoin, or just plain clones or copies with a little twist here and there. In 2017, the technology revolution was all about better technology, ICOs, smart contracts, and better cryptocurrency. Right? So that was the big theme for that technology revolution. For this one, I think everybody's probably heard of the term DeFi, decentralized finance. That seems to be a dominant narrative for this market cycle. But I think also we can't ignore the fact that Bitcoin has also now established itself as this gold 2.0, right? Which for me is the real driver. It's what's fueling corporate adoption in Bitcoin. It's also, as an extension of that, probably going to fuel institution level, corporate level interest in altcoins. We're not seeing a hell of a lot of that yet at this point in time, but I get the sense that slowly this is starting to happen. So DeFi for sure is a market theme for us, and you just have to look at the top 25 coins on Coin Market Cap or CoinGecko. And you will see, a number of them are either smart contract platforms on which DeFi is built, or DeFi tokens themselves, things like synthetics, Aave, etc. Okay, and then also there's a slightly smaller theme, but not unimportant, which is corporate applications, right? So things like supply chain, VeChain as an example of that. That also seems to be a little bit of a trend in this market cycle. But certainly I would say the two big ones is Gold 2.0 for Bitcoin and then DeFi. Now the technology, so we expect a technology revolution to begin. I would say this started shortly after it certainly gained momentum shortly after the COVID-19 bust, right? And in sort of mid-year 2020, we saw a little boom in DeFi. At that time as well, Bitcoin then was on its rapid recovery after crashing in March last year. Okay, so then once the technology revolution begins, you then go into phase two, which is the altcoin. You get this mini altcoin pump. Okay, and that pump for sure happened mid-year last year, right? Where we saw a few DeFi plays, going 100x in some instances. Okay, and you might see little pumps and retracements and pumps and retracements. And we remain in this phase until Bitcoin passes its all-time high. So that's the next indicator that we're kind of looking for, right? That's the third phase in the crypto market cycle. So this truly then signifies the start of the bull run. Now you'll see I've also added and Ethereum in brackets there. And really the reason for that is because Ethereum by far is the dominant DeFi platform in the crypto market at the moment. So it's also important that we look to what Ethereum is doing. So but certainly Bitcoin and possibly Ethereum passes its all-time high and it manages to sustain that, right? So it doesn't retrace below the all-time high again. It manages to sustain that. Then I would say we've achieved the third phase, and it certainly appears at the moment as if that's where we are. Bitcoin will start to increase. It will start to run up. Altcoins will start to pump as well. But the fourth phase doesn't happen until we see altcoin dominance in the market as a whole. And the way that we measure that is we look at the overall market cap of the cryptocurrency market, and we compare that to the market cap of Bitcoin, right? It's also known as the Bitcoin dominance indicator. And if the Bitcoin market cap falls to below 50% of the altcoin market cap, I mean, that's a nominal measure, but I would say it's probably a good measure. That then indicates that the altcoin bull market is in full swing, right? So Bitcoin the price acceleration for Bitcoin will start to become a little bit more muted, and all the excitement and euphoria then goes into altcoins. Eventually, though, the market will start to overheat, and then that's when we are at peak euphoria phase, and we'll want to know when that point is. So market overheat. There are two Bitcoin indicators that I look at. It's the Nuppel indicator and the thermocap. That certainly for me is the two the two measures that Bitcoin has reached its market top. But for the altcoins, we use something a little bit different, and I'll explain what that is. Okay, but before moving on to that, just to then cement the discussion, we've got these 5 phases. So this is what we can anticipate for this crypto cycle, right? For the cryptocurrency market as a whole, the crypto market as a whole. So it's useful to know where we are in this process, because that can help inform when we should buy, but more importantly, when we should sell. Now, this is my strategy. I'm not necessarily saying this is appropriate for everybody, but I certainly would not aim to take profit until I'm convinced that we're in phase 4, possibly moving into phase 5, right? I'd want all my altcoins to run as much as possible before I decide to take profit. Now, you may not be as willing to take risk as I am. And if you are already in the market and you've already made some altcoin purchases and you've already made some significant profits, by all means, if you feel you need to take profit, take profit. There's a saying that goes, no one's ever lost money trading by taking profit. Okay, right. So let's talk about phase 5 and how I determine my third indicator, right? So we already have the knuckle and the thermo cap for Bitcoin, but for the altcoins, I've got a separate indicator, which I call the crypto market sentiment indicator, or the altcoins market sentiment indicator. Okay. How is this developed? Well, what we've done is we've analyzed over 70 different altcoins based on a number of factors. And we did this using a fundamental analysis type approach. Okay. And I'll go into a little bit more detail about how that's done. That's not really the scope for this, for this series. Perhaps if there was interest, we can certainly do another series on how to do fundamental analysis on altcoins, okay, or on cryptocurrency. Okay, but for the purposes of this episode, know that we've analyzed over 70 different altcoins, and I'll show you an example shortly on how that was done very quickly. But inside of that analysis, for each coin, we set a buy target and a sell target. Okay, and that's based on the tokenomics. Tokenomics is just another way of saying token economics. Okay, so with that in mind, when the majority of the coins switch from buy to sell, right? That's an indicator to us that there is more greed in the market than there is fear. Okay, so you'll see we've got three pillars there: greed on the one side, fear on the other side, and in between that is what we call hope and uncertainty. Right? It's the market's kind of trying to decide, in our view anyway, whether it should run up to the buy price or retrace back down to the sell price. Okay, so when the greed percentage goes higher than the fear percentage, that's an indication to us that the market is now ready for it's almost at peak euphoria. Should be quite close to peak euphoria. So this is a good time for us to take our profit and sell off before the market goes into decline. Okay, so just a couple of key considerations around how we selected the 70 odd altcoins. We selected a diverse range of coins. See, the idea here is that you want to sort of get a representative sample of the market. Okay, so you select a diverse range of coins: high caps, low caps, DeFi plays, cryptocurrencies, smart contract platforms, corporate applications. We selected a range of these, okay? And then we did a due diligence on them. Again, as I said, I'll show you a quick example on one of those shortly. And the main aim here is to avoid scams and dead coins, right? So we look at a number of factors and we qualitatively assess the project, okay? To give us confidence that this is a legitimate project and it's not just some, pump and dump scheme or exit scam. Then linked with that assessment of the project, we also do a tokenomic assessment where we look at the token economics. Okay, and this is all based on how the project had set itself up. Is the supply fixed, versus uncapped? What is the overall market capitalization? Once it's fully diluted. In other words, ultimately, how many coins will be issued, and then base that on the current price. We look at overall market demand, and there is a bit of science to it, but there's also a little bit of art to it, and it's not perfect, but it gives us an idea. Okay, and again, I would say that with tokenomics, it doesn't really pay to overanalyze. You are looking at 70 odd coins, so you can't do detailed economic analysis on all of that. I simply just don't have the time for that. So we do a very I don't want to be unfair to the analysis, but it's a rough and ready assessment on the token economics. Okay, and we try to be quite conservative about it as well, right? So we're not overly bullish on our sell targets because again, we're assessing a diverse range of coins. Not all of them are going to go at the same pace. Some might pump and then retrace. Others might be a little later to the party. So you want to be relatively conservative in your price targets for sell. Okay. The overall philosophy for this kind of approach is that we don't want to trade individual coins. Instead, we want to trade the market cycle. Okay. So this is the difference between, guys who are into traditional TA and are doing day trading. I mean, they're trading individual coins based on the price behavior on individual coins. In this kind of fundamental analysis type approach, we want to trade the market, right? So it's a little bit more, it requires a little bit more patience. But I think it strikes the balance between exiting too early and not taking profit in time. Okay, so hopefully that gives you a little bit of a sense of how we've generated our crypto market sentiment indicator. This is just a copy of one of the due diligence sheets we've done for the Theta network. So you can see here, we try to answer a bunch of questions, right? So it's broken up into the top part of the due diligence sheet is on, looking at the narrative of the coin and its utility value. And we try to answer, as I said, a bunch of questions. And based on the answers under each section, we indicate whether this is positive, negative, or neutral. Okay. We then also do a tokenomics assessment. Again, you can see that that's reflected in the bottom part of the sheet. So we look at the current price, current market cap, the amount of coins that are in supply, who holds the coins, and we kind of then again make a qualitative judgment on whether this is good or bad, okay, positive, neutral, or negative. We then do an expected future price calculation based on an expected future market capitalization. And this is unique. As I said, it's a bit of art, it's a bit of science, and the art part comes in trying to understand future market cap as it pertains to this coin in the market that it's trying to play. Okay. So you can see when we did this assessment, the price of Theta, this was around early August last year, the price of Theta was at 31 cents a coin. We anticipated a future price based on our tokenomic assessment and market cap assessment. We anticipated a future price of $2.70, and Theta's already overshot that for this market cycle. So you can see, I believe we took a relatively conservative approach. So right now, Theta would be indicating sell, okay? But that doesn't mean that we're going to sell out on Theta now. We'll wait for the market sentiment indicator as a whole to indicate sell before we sell out on Theta. Because we'll sell everything at the same, well, in theory, we would sell everything at the same time, okay? And by that time, it's possible that Theta might be sitting at well above $2.70, okay? I think the other thing to indicate is, just without sort of showing the information at the moment, looking at the 70 altcoins that we've assessed, most of which we've bought into, not all of them are doing well. Some of them are actually doing quite poorly, but overall, the portfolio is doing exceptionally well. Okay, and I think that's the reason why we also wanted to spread our risk, right? Certainly, we are more heavily invested in Bitcoin, and there are a couple of altcoin projects that there's kind of true belief in it, if I can call it that. So we would have a little bit more invested in those. But for the majority of the altcoins that we've invested in, we've taken sort of small bets spread equally amongst them. Okay, And some of them are doing really well. Other, a small minority are not doing well at all. But on balance, the portfolio is doing incredibly. Which brings us to the end of this discussion. I hope that you found what we've presented here interesting. I think probably for some of you this might be a little bit frustrating because we've whet your appetite perhaps with some of this material. What we plan to do in the next video is we will tie everything that we've spoken about together, and I'll go into a bit more detail around our overall investment strategy using the information that we've now shared with you. So we'll talk a bit about how the portfolio is constructed. We'll also kind of share with you high-level performance so far, and give you a little bit more guidance on or information on buying and selling in this market cycle. So again, I hope that you found this interesting. Please, if you've got questions or comments, fire it down in the comment section of the YouTube episode. I'll be more than happy to answer any questions that you might have. And otherwise, thank you for joining us, and hopefully we'll see you in the next episode.